Yo, guys, what's happening? Alright, so I thought I'd do this video to address a couple of the conversations that we had during the streams over the last couple of days. What's the difference between a trader and a holder? Alright, or hodler, however you want to put it. So, we have to address a couple of things. The majority of people that are coming into cryptocurrency right now, I'd say most were hodlers or holders. For the sake of arguments, I'm just going to call them holders. Now, traders and holders, one's emotional, one isn't. That's the usual conception about these two types of people that come into the game of speculation. But both are emotional. You see, a trader's emotion can be intermittent. A holder's is going to be a long-term emotion. Yeah? Considering where Bitcoin is right now, there are a lot of people who were buying Bitcoin when it was rising. And that was when it used to be 30k. And they held it all the way up to 65. And they probably still held. Now they're back to square one. Or they've been adding more whilst it was going up towards 65. So they probably added a bit more when it hit 55. What I'm trying to get at is holders will go through a lot of intense emotions and they will have to make certain decisions. Because a common theme across the board is my bags, I've dropped 60, 70%. I don't know what to do. I can't put it into USDT. I can't do this. I can't do that. You see, a trader doesn't really have that problem. A trader simply steps in, puts his money down and gets out. Whether it's a scalp, 5 minutes, 10, a day, swing traders, 3-4 days, they don't have that problem. You see, a trader will experience intermittent emotions, but he is in complete control of that situation. He has to make a decision at that point in time. Will he close the trade in profit or will he close it at a loss? Now, most traders tend to hold trades because they don't want to lose money. That's one of the differences with a trader against a holder. You see, a holder, naturally, he anticipates price to drop. A true holder will never think of price dropping as a detrimental thing. He will always say, hey, it's cheaper. You see, holders are value-based. And when I say value, means if Bitcoin was 65 and now it's at 30, or 31 for the sake of arguments, they would say that it's now kind of cheap. Cheaper than what it was. Now, holders have the opportunity now to either say, okay, if Bitcoin continues from this point, fine, I will buy and I'll see what happens. Alternatively, if Bitcoin does continue to drop, holders should be excited for this. But the problem is that as Bitcoin drops, everything else drops. And people's portfolios are starting to deplete, which then triggers the concept of a strategy with your bags as such. Yeah? Look into investment portfolio. They'll always tell you about diversifying your risk. You know, don't put all your eggs in one basket and what have you. You've heard the old age sayings. Holders have a big commitment. They have a lot of capital exposed for a long periods of time. Traders are the same, except they can have high amounts of capital exposed for a moment's notice. And then they'll get out and do it again and again and again. A holder will probably be purchasing once or twice a month, maybe once a quarter, maybe once a year, or they just simply will never buy anything else, buy once and leave it. It's like the concept of buying a house. You buy one house. Usually you stick with one house. Then when you start getting equity in the house that you've got, you can withdraw it, put it down as a payment for another. That's still holder's mentality. Yeah? Pulling equity out of your investments, putting it somewhere else. But what I'm trying to get across to you is this, guys. As much as traders don't really have the exposure as a holder would, the problem is traders have the benefit of making a decision now. Holders also have that decision, but they will always have that gremlin at the back of their mind saying, yeah, but you're a holder. You're in it for the long run. You're in it for the long term. Bitcoin will get to 100 grand. Double up. It's cheaper now. What I'm trying to get across to you guys is this. When you're coming into cryptocurrency or whenever you're going into any speculative instruments, whether it's stocks, commodities, bonds, T-bills, you name it, make the distinction. Are you a trader? If you're a trader, you come to the charts every day. If you're a holder, don't pay attention to the charts every day because they will trigger emotions. So as a holder, if you come to the chart, as you can see in front of you right now, and you see this behavior, you think, oh, Bitcoin's actually quite cheap now. It's gone all the way down to 30K. Happy days. A trader will say, oh, right, cool. We've got a retrace pending. We've recovered vector candles. Wonderful. We're at the 50 EMA. Do you think a holder really cares about the 50 EMA? The only chart that the holders should really be paying attention to is the monthly, in my opinion. Now, this chart has triggered a lot of concern. But I'm sorry. You're in the game of speculation. You're all about trying to get confluences together. People will go and get various other strategies, try and put them all together to increase their win rate. This is increasing your win rate by helping you become more observant. These are vector candles. By this token, is it valid to claim that Bitcoin could actually come back down to these vectors? Now remember, it's not if they will or not. It's a matter of when. For all we know, Bitcoin could now just bounce from this point here and make a move. How many times have we seen price bounce off the 13 EMA and continue on from that point? Should we go take a trip down memory lane to the coin that just kept riding the 13 EMA non-stop and wasn't stopping at all? Do you remember when Ethereum was just rising and rising and rising and she would not stop at all? Yeah, look at how long she was holding that 13 EMA right there. Kept going, back up, kept going, kept going. She rarely touched the 50. Okay? Kept moving. Look at that 13 EMA holding price. Okay? Ethereum was rising just purely off the 13 EMA on the 1 hour. What am I trying to get at? Look, looking at this chart, I'm helping you become aware. There are candles here. So at some point, we will see these candles, but we won't know when. All we have is what we've got right now. So currently, this month right now has sat at the 13 EMA, and the 13 EMA is flat. So is this the floor? We will wait and see. See, we now have 3 pins to the low right here. They hit this zone once, twice, the third time, but it's pulled away each time. Ideally, on the monthly time frame, it's going to take a month or so for things to play out. I said it in last night's stream. It took Bitcoin 1 month to go from 18K all the way up to 29. It took Bitcoin 1 month to go from 32 all the way up to 58. At the same token, it took Bitcoin 1 month from 59 all the way down to 28. What I'm saying to you is although the candles may get recovered, it won't take long for them to get it back up. That's what's important. You need to get that in your mind. And it's important you pay attention to this chart. All right, have it in the back of your mind. Holders, understand the nature of your game is to buy as much of it as you can at a cheap price because you're in it for the long run. This chart, you know what it looks like? It looks like Bitcoin was released yesterday. Okay, this was its initial public offering. It's come to the exchanges. Binance have listed it, Crypto.com have listed it, and we've had a spike up in volume. And now it's going to come back down to regulate. No different to when Sheepcoin got listed on Binance. No different to when any new coin gets listed on any exchange. All right, you see a massive pump up and then it comes back down, except this is on a monthly time frame, so it's going to take a little while. And Bitcoin does have a little bit more history than simply a cheap coin, okay? But it was once a cheap coin. So the takeaway from this video is simple, all right? If you're a trader, this is what you need to be looking at. These smaller time frames. You get your money in, you get your money out. That's all you have. If you become emotional, learn to kill that emotion by simply closing the trade, because all emotions that are triggered in the chart have the ability to be cancelled by simply closing the trade and then dealing with the issue whilst the trade is finished. Do not deal with a loss whilst in a loss. Okay? So important, because then you'll get caught up into try the battle to close a losing trade. It's hard enough that you've sat in a losing trade, all right? And your money's still being exposed. Trying to come to terms with that loss so that the loss can get worse and worse because you've become accustomed to the idea of the loss, okay? That's not the way you preserve your capital. The moment you see an amount of money that you're losing, you say to yourself, okay, has it technically gone to the area where I would deem that I am wrong in the chart? If it has gone to that area, why are you asking the question next, which is, should I close it? Because if you've answered question 1 correctly, you wouldn't have to go on to question 2. And that question 2 is, should I close it? All right? It's like rule 1, close a losing trade. Rule 2, if confused, see rule 1. Yeah? Always close the losing trade. Now, a lot of people have the problem of opening a trade, it's losing, they close it, then it goes in their favor. Welcome to trading, guys. All right? Welcome to the nature of the beast. If you're experiencing that sort of thing, keep your trading times to a certain time frame in the day or the week. For example, I only trade Tuesday, Wednesday, Thursday. Those are the days that I decide to try and hit the market. Why? It's the most busiest time. Friday, Saturday, Sunday, volatile. All right? It'll just be a gamble for me then. If you really are desperate to trade at the weekends, don't even use a lot of money. All right? So, the takeaways from this, guys. If you're a trader, you understand that yes, things can get emotional, but you are in complete control of your emotions, because emotions appear when biological influences are triggered in the body. Emotions, okay, before they're emotions, they are biological triggers. So, if you're in a trade that's going against you, you're close to approaching your liquidation point, you start to get a little bit anxious, all right? You start to perspire. Your heart rate is increasing. You start getting agitated. You're getting concerned. Fear. Your emotion of fear has evolved. You're sat in a winning trade and price is going, and all you can think about is how much more money can you get from this trade. Pay yourself. Pay yourself. You become relaxed. You don't care. Right? Heart rate is nice and chilled. Okay? It actually could be going up because you're making a lot of money. You start planning in your mind, oh God, what could I buy with this? Yeah? Then you become complacent. Then you go downstairs and you start cooking. Or you go out for a drive. Have your phone on your dashboard, keeping an eye on that positive trade, great news. And then before you know it, by the end of the day, you're back at your charts, staring at the screen, going back to the aspect of being anxious, perspiring, because your winning trade has now turned into a losing trade. Do you understand what that does to the soul? All right? Don't put yourselves in that situation. Get your money in, get your money out, reset. Okay? Trading is all about resets. You're making one decision at a point in time based on a set of confluences. Make that decision and reward yourself for that decision. Done. Finished. Okay? This is what distinguishes good traders from the bad ones. Holders, if you've managed to make a return on your portfolio, pay yourself. Take that money out. Do something with it. Put it elsewhere. Don't get caught in the idea of knowing that you've got money at risk and that you're hoping at one day it's going to end up being massive amounts of money where you can just call it quits and just live the life of luxury. It's investing, holding, trading. It's all about dealing with uncertainty and having reasonable expectations on your rate of return. All right? I hope this helps you in some way, guys, just to bring things into perspective for you. Bitcoin right now is at the lows, very interesting lows. Notice the stopping volume candle on the 15-minute time frame. Flip over to the 1 hour. It's recovered all of this vector candle from the final pump to the downside. We've got 1, 2, 3, 4 hits to the lows. Okay. Nearly hit the range daily low for the session. All right. But we're not out the woods yet. The fact that the 5 and the 13 are now below price, that's a good sign. We need the 13 EMA to cross over the 50 EMA. The only way that's going to happen is if some big news happens or price continuously rises up. We look back and we can see that the W formation does look very promising. If we finalize the drawing from this point here down, we are now expecting a shift out of the zone. The sheer fact that they come back down and recovered this vector candle, we do have more vector to take on, okay? Which tells me that something might happen. They may bring price back up to the 50, drop it down one more time and take this liquidity, and then that's where the decision will be made. And remember, guys, it's still okay for Bitcoin to go down. Always think that it's okay. As much as we might think it will never go below 30, the hedge funds will this, and all the big players are going to step in. Listen, if they're buying 1,500 Bitcoins, okay, drawdown is not really an issue for them. If they're in a position to buy 1,500 Bitcoins, all right, they have liquidity to sit through a drawdown. So it's when they believe it's cheap enough, that's when they will step in. All right. Doesn't matter what we think. Okay. We're just going to try and take advantage of their liquidity pushes. That's the nature of our game. All right. Cool. Mad love and respect to all of you guys. Have a wonderful day. Peace.